The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 17th marvelous Monday edition of today's, it's not the opening bell, this is the Money Masters show. I'm your host, Steve Rhodes. Sorry about that, folks, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, words of wisdom brought to us by our extraordinary producer, Alberto, who makes everything we do seem so seamless, as far as being able to get these shows out to you folks out there, and I can assure you it is not. But Al, he starts his day with this incantation, and I think you should as well. It goes like this: watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become habits. Watch your habits, for they become your character. Watch your character, for it becomes your destiny. Let's go check out the destiny of the markets out here right now. We've got the Dow. It's trading up 194 points, trading out at 16,260. The S&P up 20 points. It's up 1861. NASDAQ up 55 points. It's trading out at 42.99. Russell 2000. That is trading up 14 points. That is, I don't know who's leading the charge. The NDX 100, that's up 1 3/10%. That's trading up about 50 points. New York Stock Exchange, not too shabby. That's up 109 points. Our call number is 877-927-6648. Give us a call, folks. Happy to take a look at your stock chart, answer whatever question I can. Your question is, though, hey, where's this market headed to? So let's go take a look at it. Big move here this morning, actually much larger in context of, if we were to go take a look at the futures markets, if you were to look at the actual low that was put in sometime around the 7 o'clock time frame last evening, I saw the Dow futures trading down around 72 points, and maybe got a little bit larger than that as I looked away or something. So a big move inside of the markets for sure. But let's take a look at the indexes out here. Let's take a look at, right now, you're trading out at 1861. Big wide-ranging bar, of course, is going into a wide-ranging bar that took place last Thursday. From high to low, meaning the swing point high, most recent swing point high, March the 7th, down to the low out here that came in on Friday. It's out at 1839.57. 0.382 retracement is 1856. You've sliced through that. That says that the S&P future, the S&P, I got to get the futures out of my mind. The S&P wants to trade up to at least 1866, 75, 76 out there. That's your 0.618 retracement coming into that area with the wide-ranging bar out here. So I would expect that at least that level to be tagged. Doesn't that mean it needs to be tagged today? But unless there's some type of significant reversal in the market. And we'll take a look at the currency pairs, see if there's anything going on there that suggests that is a outcome. Then we'll have an idea. But otherwise, right now, you can expect the S&P to trade up a bit higher. Could easily trade up to the 1874 level out there, the 0.786 retracement. Now, what the S&P 500 did not do, it did not crack through the swing point here from March the 3rd. That low was 1834. Traded down, traded into it, but right now it has rejected that level. We'll take a look at the ETF structure here momentarily. That's on the S&P 500. That is likely where it is headed. Take a look at the Russell 2000. This is actually the strong hands in the marketplace. I believe it is. We take a look at it. Also having a nice wide-ranging bar this morning. It is almost up to the 0.618 retracement level, 1197. In fact, you could say it's actually hit that area. So probably we want to be, not probably, probably is not a good word, is it? Maybe it's a good word. Yeah, mastering probability. That's a good word out there. So what this is probably doing is going to make its way up to about the 1204 level. But with it being what I believe is the stronger of the indexes out here, this is probably that one that we should really be paying attention to for its next move. Now, and we'll see when we take a look at the IWM, because we know that the interesting thing about the IWM, it's got a confirmed A to B equals CD to the upside out here. So it's strong on many accounts. Of course, that's this big wide-ranging bar out here from March the 14th. Now, price in essence came back on lighter volume. I believe we'll go take a look at the IWM, which is into the breakout session, which was March the 4th. Never made it all the way down to the low of it. Certainly closed inside there on Thursday. But traded and closed above that level, meaning above 1179.62 out here. So the question is this. We already have one A to B equals CD to the upside inside the IWM. We'll take a look at that in a moment as well. The Dow, we haven't taken a look at the Dow. Nice wide-ranging bar coming off of the lows of Friday out here. That says the Dow could easily trade up to the 16,330 mark out there. That's your 0.618 retracement area. That's all assuming that today's bar stays similar, stays as it is. But it's a nice bounce that we are seeing inside of the Dow. If we take a look at the NASDAQ composite, here, what you're going to see is this is actually weaker. Certainly not the leader out here. That's why we say the Russell 2000 is the one that we want to be paying attention to for any kind of, you want to pay attention to what's weak and what's strong. So certainly the NASDAQ composite is one to be paying attention to because it's only trading up to the 0.382 retracement level out here. 42.91. In fact, it's trading at 42.94. So I would say we're going to be paying attention to strength and weakness, and at this stage we've identified that to be the compositor. In this case, we'll make that the Qs out here, and we'll pull up the NDX here momentarily, but this is now what has been the strength out there in the marketplace actually turned to the weak level out here. So that's only made the 0.382 retracement. Something to think about. You'll see the same thing here as we take a look at the NDX 100. 3670 is the 0.382 retracement, and this wide-ranging bar, today's bar, is not giving you any kind of warm, fuzzy feels, at least not yet here, that it actually wants to make the 0.618 retracement area. So is it going to be that it's the NASDAQ, is it's the Qs here that are leading us down, and it's a fight right now between the Qs and the Russell 2000. But that's not all the index that we can take a look at. Let's go take a look at the Gold Vectors Index, the XAU. This here has formed, come close to getting to the 1 to 1.272 A to B equals C to the upside. Nothing too bearish. It is a bear sash candle as we speak here today. We'll see how this plays out inside of the XAU out here, but it's got some pretty good support, probably at the 200-day exponential moving average. 100.46 is the number there. Let's take a look at the New York Stock Exchange out here. Now, on the NYSE, if the bulls were able to manage a session of 1,855 or more net advancing issues, right now you're at 1,898, so that would qualify. If you get more than 1,855 at the end of the trading session, the bulls will actually have taken back control of the New York Stock Exchange. I'm referring to the summation index turning positive. I'm referring to the McClellan price oscillator getting above the zero mark out there, and I'll have to do some additional homework tonight if in fact that occurs out here. What the New York Stock Exchange is struggling with right now happens to be the 2007 high. That number is 10,387.17. It's trading at 10,387.86 out here. You close above that area, you close above 10,378. Looks like 10,443 would be its next move out there, the 0.618 retracement. What the New York Stock Exchange did do, came back and tested the actual breakdown session from, was it last Monday? Yeah, maybe it was last, it's 2 Mondays ago. That was on March the 3rd out there. That low was 10,276.13. It was tested, it held, tested and rejected. Now you're seeing price travel above that session, which is 10,358.81. So that's what's going on inside of the New York Stock Exchange. Let's take a look at the stocks out here. We'll round things out. We take a look at the semiconductor index. That's off the bottom nicely here. Bear separating line candle. This looks like it wants to trade to the 572 mark out here. That's your 0.618 retracement area. Let's take a look here at the VIX index, and we'll switch over and take a look at the ETF structure. So the VIX index here, even with this nice move, you can see that the VIX index is still above the 50-day exponential moving average. Now, certainly off of Friday's close out there, it's trading at 1577 out here. The 50-day exponential moving average is priced at 1489. If it moves down to that level today, near at 1577, you'll probably see another 100-plus points put into the marketplace to the upside out here. But the VIX is trading still in bearish territory, which is above the 50-day exponential moving average. So that says we got a little bit of divergence in the marketplace. Now, we'll switch over. We'll take a look at the ETF structures out here. If I can't get all this done between now and the next break, we'll look at the currency market then after that. Well, let's start off by taking a look at the SPY. The SPY here is trading out at 186.58. Volume so far, 27 million. We've been trading for 45 minutes. Now, that's not too shabby. 27 million in 45 minutes time. I don't know if the volume will stay up there. We can go to look at some intraday charts or what have you. But what it's trading into is the downdraft here from March 13th, 155 million shares to the downside. Now, what the SPYs did was they came down into the swing point from March 3rd. That had 167 million shares. They got down there with 155. So even on that big move down on Thursday, not enough volume to bust it down. You know the saying, you know the expression, if you can't bust them down, try to bust them up. Now, however, I will say this, the closing was within inside that swing point. So for all intents and purposes, we should have seen a test of that low, 183.75. We didn't see that. What we saw was a push lower on Friday with similar volume, 153 million shares out there. Still not enough to go ahead and bust them down. If we take a look at retracements here, the retracement and the pullback so far has been relatively meek, meaning that from the lows of February 5th to the high out here on March the 7th has not made the 0.382 retracement yet, and that is normal. If we take a look at the current retracement here to the upside and what we're looking at, you can see sliced right through the 0.382 level. 187.23 looks to be next on its target list, and that is inside the SPY out here. We take a look at the Dow Diamonds, see what the diamonds are doing out here. Now, the diamonds here, actually, which are the weak hands in the market, right? So the weak hands on Friday, interesting enough, the diamonds got below the swing point of March 3rd. So here where the SPYs were trading into that session, the diamonds actually traded down and tested the low of that swing point, which, by the way, is 160.49, 9.1 million shares on that trading session, and tested it with 8.6 million shares. So lighter volume, still kind of, equal to or, heavier than what one might like to see, because it wasn't much of a back off of the volume from Thursday. Thursday had 9.5 million shares. Nonetheless, it was a rejection of price and volume of a swing point low in what is the weakest of the structures out there inside the ETFs as well as the indexes. So, where's the bounce likely to take us to? Inside of the diamonds. By the way, so far this morning here, we've seen volume of 1.8 million shares, which is not too bad, considering we saw 8.6 million shares in a full trading day on Friday. Looks like 163.17 would be its next move to the downside. And that is inside the DIA. Let's go take a look at the Qs here. The Qs right now trading out at $89.67. Now the Qs here, so remember, I said the Qs are the weakest. Well, the Qs actually closed below the March 3rd swing point, albeit on light volume, though. You can see 38 million shares, 38.9 million shares, and Friday's move down there was 38.7 million shares. So similar volume, not exactly like it blasted through with expanding volume, because that it did not do. Right now we've got the Dow up 178, S&P up 19, NASDAQ up 46 points. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 180 right now. S&P is up 18 points. And let's go check in on the IWM, the ETF for the Russell 2000 out here. It is trading out at 118.79 now on what it has done thus far is the swing point low from March the 3rd out there, 50 million shares, the high of which is 117.26. We saw that area, 50 million shares, get tested with 37 million shares. That was on Wednesday. On Thursday, we saw 53 million shares going into 50 million shares. That was saying, oh, okay, we're starting to see volume accelerate to the downside. Friday was really an inside trading session, a move higher out there with basically lighter volume, 46 million shares versus the downdraft at 53. In essence, a light volume downdraft. Now, this is the strongest of the indexes. Certainly not the Qs, certainly not the diamonds, certainly not the SPYs out here. So right now, what the IWM is doing is trading into that downdraft session from Thursday, from March 13th. The high is 118.96. So we're really going to be wanting to pay attention to what's going on inside the Russell 2000. futures, the index, the IWM, to be able to get any kind of a signal out here. Now, what the IWM is now run into. So I mentioned, that you've got a confirmed A to B equals CD, and the reason why I say that is because the swing point of the larger pattern, the B point, happens to be January 22nd out here. January 22nd's high was 117.37, 24 million shares. We had that anomaly day that we didn't see the same type of action inside the other ETF structures, meaning the SPYs, the Qs, and the diamonds out here. But inside the IWM, we had 112 million shares to the upside. Take out the B point, 112 million shares. That high now because we've pulled back in essence to the breakout area-ish, right around there. But it's going to have some resistance here at the 120.58 level. That's assuming that it can actually get up to that area. It's trading inside the swing point. So any close today inside of 118.18 or 118.84, what that says, light volume or not, says that the IWM would probably want to go ahead and make a run and test that level out there. So if we go from that high, by the way, on March the 4th, down to low that came in on Thursday out here, you'll see that the IWM has also hit the 0.618 retracement level, 118.98 out there. So it's going to be the Russell 2000 that's going to pull the market higher out here. And that's the one that really has exhibited the amount of strength if you go back to the trading session of March the 4th out there. So we'll be paying attention to what happens inside of the Russell 2000 for next moves. Let's take a look here at let's go take a look at the Euro-Yen. Let's go see what's going on inside its daily charts out here, maybe some intraday charts as well. Let's do that. So on the Euro-Japanese Yen right now, coming off of its swing point high, swing point high that I'm referring to is where it made the Gartley sell pattern. That Gartley sell pattern, that high on March the 7th, 143.77. That's the number. If you go from that high down to the low out here that was put in on Friday, that low being 140.43, it's only made a 0.382 retracement out here. So the currency pair doesn't have that exuberance that we've seen. The exuberance that is matched here inside this currency pair looks like the Qs, the NDX 100, the composite out here, meaning that it's only made the 0.382 retracement versus what the Dow and the S&P and the IWM, in fact, have done out here. Nonetheless, what the Euro-Japanese Yen did do successfully was it came back to its breakout session, and there's no question that its breakout session was this wide-ranging bar from March the 6th. The low out there being 140.41. So that level it came back to. You've got a nice big bullish engulfing candle that's taking place today inside of the Euro-Japanese Yen out here. But we're going to want to obviously pay attention to, because you've got a confirmed A to B. Well, you have a confirmed Gartley sell pattern. And what it has done, it's done what it's supposed to do, right? 5 outcomes of any Gartley pattern. In this case here, it's a Gartley sell. Outcome number 1, the 0.382 retracement. It's done that. In fact, it did that. And when you make your first outcome, typically you're going to have people take some profits and get off the elevator. So that's what we've seen take place here inside the Euro-Japanese Yen. That is on the daily chart out there. If we go take a look at a intraday, intra-session time frame, let's see if I can pull up a 120-minute chart. Nope, I can pull up a 120-minute chart. You got to like that. Oh, this is also interesting. I'll take a look at the ES Mini here in a moment. So the ES Mini is run into its resistance point, with a point that I look at between being long and being short in the marketplace, although I've been stopped out of my short positions for profits, and that's really what you do inside markets. Always make sure that you are using stops and let the market do what it is going to do, and come back and take a look at your next trade setup out there. Inside the Euro-Japanese Yen out here, you can see again how it's really kind of been weak. It did have a nice price relative strength divergent pattern out here that was forming last week on Friday. 877-927-6648. Dow's up 172, S&P up 17. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 165. S&P is up 16. So now we're going to go check in on the ES Mini. This 120-minute chart that we are looking at. I'm going to actually do this. I'm going to shift this over now. And I know you got a couple different areas, a couple different swing points that you can take a look at retracement levels. So let's do the following. Let's come from the swing point high out here inside of the S&P futures contract. That was 10 o'clock in the morning. That was on March the 7th. That was at 1880.50 was the number, all the way down to the low that was put in here last night. Now, again, it's a 120-minute chart, so that's showing at 8 o'clock last night on my screen out here. And what we can see is that, close to the 0.618 retracement level, 58.50 would be that number out here so far. Intra-session high is at 1855.75. Now, that happens to be the 0.618 retracement. We're going to take a look at our next swing point that you would use for retracement levels. You'd have to use the high at 12 noon on March the 11th. And if we use that, you can see that that's what has been hit thus far, that 0.618 area, 1855. And then you've got one more that you could use out here. That's where the waterfall cascade began. Here, the C point of an A to B equals CD down. That would be the 10 o'clock session, the high out there from March 13th. That number is 1867.75. So if you go from that high down to the low out here, I would say that we'll likely see some significant resistance. That's the 0.78. The 0.786 level of that takes you into that 1850 area. So I would have to say that becomes the area that is kind of make it or break it inside of the market. If the ES mini can get above that level, it sets up another run to the highs, in my opinion. 1868 would be the 0.786 retracement level, but I would have to say it would also then be trading right just about into that swing point on the 120-minute chart. That swing point low, by the way, is 1867 from March the 7th. So significant resistance should be up at about the 1859-ish level out here. And that's the ES mini. At this stage, no bearish reversal signals. That's just a little pause button that we are seeing at the moment. That was the ES mini we were taking a look at. Again, back to the euro. I think we were looking at the euro on the 120-minute chart here before we went back to a break. And so if we take a look at this, what we had out here, and you had this consistent with all of the indexes, all the futures index charts out here on the 120-minute time frame, and it was also showing up here inside the euro, Japanese yen. So you got really consistency, synergy, whatever the word is that you like to use. We saw price moving down to a lower low that took place at 9 o'clock in the morning. That was on March the 14th, so that was on Friday, and it was doing it with what? It was doing it with less relative weakness out there. So it was moving lower, didn't have the same type of oomph, didn't have the type of strength on the way down, and now we're seeing a bounce from that. It's above the 0.382 area, which would be 141.55 with price. And this is the euro Japanese yen that we're taking a look at. And I'm only coming off of the most recent swing point high, meaning 11 o'clock in the morning on March the 13th. So from that high down to the low, this says that the 142.23 area is a likely target on this bounce. Neither overbought nor oversold. No reason for it not to be able to move all the way back up to its high out there. If I come from the swing point high from 11 o'clock in the morning on March the 7th down to the low, you can see it right now is traveling right at the 0.382 retracement area. So I'd have to say that this would be an area here where this is the more important retracement number, 141.71, because we're really going from high to low versus some intra-period swing points that we're taking a look at. So if we see a close above 142, that says 142.50 is likely the next target area for the euro Japanese yen out here. That's what's going on with that currency pair. Quick peek in on gold and silver, light sweet crude for you. Goldilocks here right now, trading out at $13.78. In essence, running into the top of this rising price channel, but I kind of discount the drawing of the. More important is the bottom price channel out here. Nonetheless, you've got gold that's formed a 1 to 1.618, A to B equals CD to the upside. That's if you use the swing point low from December 31st at 1181.40. And your B point, the B point I would use is January 27th's high. That's at 1279.80. Pull back out here into the January 30th time frame. You'll see you're very close to the 1 to 1.618. That level, that is at 1396.50. So far, intra-session high has been 1392.60. That is on Goldilocks. Let's take a look at silver. We look at silver on a daily chart out here. Silver has broken above old resistance, just as Goldilocks has done. Big-time resistance, that is the price channel. And today we're seeing a test of that level. Silver, though, still needs to break above the swing point here. To really get super bullish on silver, it's going to need to break above that February 24th high, which is $22.18. It's trading right now at $21.38 out here. Light sweet crude, let's look at this on a daily chart. The first chart that pops up happens to be the 120-minute chart, but it's consolidating at its lows out here. That says it may have more room to the downside. In the case of light sweet, oops, didn't mean to grab that. I meant to grab this corner. There we go. In the case of light sweet crude, looks to me like the 95, 50, 60, 70 cent area where it would form a nice little Gartley buy pattern. That is where price likely wants to head to. Trade at 98.47 right now. If you take a look at the daily chart, there's really nothing here that looks bullish inside of the case of light sweet crude. On the intraday time frame, it has worked off a oversold condition out there. Let's go check in on some of the S&P 500 sectors out here. So let's go check in on the spiders. Let's go see what we have going on here, see if we can get any kind of read on anything. Let's start off by taking a look at the XLF. The XLF right now is trading out at 2203. So what do we know about the XLF out at this stage? Let me get rid of some of the things that I've got on my screen out here. Here's one of the things we know about the XLF. The XLF was traveling a nice little rising price channel, broke through that price channel back here on the trading session of January 23rd, finally went back up there and tested it on March the 7th. Now I had these price channels drawn in here a long time ago and haven't touched them. In this case here, price tries to get back into the rising price channel on March the 7th. It rejects that area, a little bearish engulfing, a candle to follow 2 sessions later on March the 11th. Moved down with some pretty decent accelerated volume on Thursday, not so much on Friday. Thursday was down with 56 million shares, really traveling into, about 49 million shares. So we saw accelerating volume to the downside. Friday was a let off the gas as we only saw 44 million shares. Now, what we have inside of the XLF, let's draw this line across the bottom of our screen out here. The XLF, remember, inside of the S&P 500, so just to kind of give you an idea, we'll go back and take a look at it. Why did it draw that line like that? That was pretty disgusting. No, somehow I went to a 3-minute chart. You're not interested in a 3-minute chart, are you? I'm not. Okay. Let me try to redraw this line out here, see if I can do that correctly. Okay. So here's that downdraft session, March the 3rd. In fact, let's do this. Let me move this off to the side like that. Let's put up a SPY chart out here so we can just measure things side by side, just to give you an idea of strength or weakness of a sector within inside of the S&P. One other way to maybe take a look at it or measure it. We'll move that. I'll make that a little bit smaller, and we'll make this a little bit larger. And on the SPY chart out here, now in the case of the SPY, so just so we kind of get things similar look, what I'm going to do is that the XLF is like the third weighting structure, I believe, inside the S&P 500. So here's our same swing. Well, Let's do this. Let me to draw things properly. Let me put this. Here's our March 3rd swing point. I'm going to come back here, and I'm going to move this to the March 3rd swing point. Here's the March 3rd swing point. So we're using the exact same, in essence, high. You can see price inside of the S&P 500 pushed lower, right? But take a look. I mean, when I say pushed lower, traded in the swing point of March 3rd. But take a look at what went on inside the XLF. Even though it's pushing lower with some volume out here, never made it back to that level. In fact, it didn't even get a chance to test the bottom of the gap, meaning the low of the March 4th session out there. So the XLF, not too shabby. Compared to the S&P 500, the XLF certainly was helping to push it lower, but wasn't the real culprit out there, was it? Let's go take a look at the next one up on my screen that I can do that. Let's take a look at the energy sector. Let's just kind of make those, let's just do it. Let's go make those measurements out there just to get a feel for what we have. Now, in the case of the, let's get rid of that A to B equals CD to the downside. So it's March 3rd is the number that we're taking a look at. All right, March 3rd. So if we take a look at the energy sector, here's March 3rd, and that is the low here of $86.81. Put a little red line, a black line across there. You can see even price right now is trading below that level. So the energy sector here, which I think is the fifth weighting structure inside of the S&P 500, you can see it truly is helping to push price lower inside of the market. So what does that mean to us? It means on the bounce. It means on a failure. It means the XLE, the energy sector, probably would be one of the, if you were interested in playing sectors, would probably be one of the areas that you would take a look at. And also from a weakness standpoint, it's a place where we want to get some kind of a market signal, right? Right, exactly. Well, I don't know. I mean, it seems right to me. Now let's go take a look at the technology sector, the XLK. Looks like I've got to switch over. Looks like that's on a different side of the panel out here. So let's go do that same thing. So we have things kind of side by side out here. And if we take a look at the XLK, it's trading at 35.98 right now. Let's pull this up and let's go benchmark the technology sector, the number one sector inside of the S&P 500. Let's go benchmark it for the swing point. Well, take a look at this. So the number one sector, the XLK, is the one that certainly was pushing, and it would make sense, right? It was pushing prices lower out here. Let's use a red line there. So let's go take a look at volume. So on Friday, the XLK closed below the March 3rd swing point. That had 9 million shares on March the 3rd, and on Friday's session, it closed below with what? About 9 million shares, about just lighter, 8.9 million shares to be exact. So a little bit lighter volume out there. So this would be what? This would be another area. So just like the energy sector on a short would be a sector to take a look at, I would have to say, because of the push lower out here, you'd have to say that the technology sector, the XLK, would be one that you would be taking a look at from the short side of the market out here. So let's take a look at what? Three of the sectors. Let's take a look at one more. Let's look at the healthcare sector, the XLV out here. I think that wraps up the top 4 or 5 inside of the S&P. There's 9 sectors out there. You can take a look at the XLV. If you look at that March 3rd swing point, well, you'll see that too was pushing the prices higher. So it wasn't really the XLF. Right? So I guess the point that I'm making here is that the financial sector is actually stronger than the other 3 or 4 that we've taken a look at here thus far. And so therefore, from the short side, I'd have to say you're better off taking a look at the XLV, the XLK, the XLE versus the XLF out there. Now, in the case of the healthcare sector, its March 3rd swing point low had 8.9 million shares. The low was $58.61, and you close below it with 8 million shares. Lighter volume, closes below that level. Does that on March the 14th. You're back up above it so far today with 2 million shares. What it's really going against is this downdraft session with 12 million shares to the downside from March the 13th. So we've got a couple of sectors that we can be paying attention to for something that's either fallen apart or not. And today's volume will be key on any bounce or continued bounce inside of the marketplace out here. So let's take a look at some of the sectors within inside the S&P 500. Let's go take a look at some of the stocks. Let's look at some of our core holdings to see what they are doing out here. I'll see if I've got Priceline in the fray out here. PCLN is the ticker symbol. That is trading out at 1301. That's actually leading price-wise, not just Priceline, but price-wise, leading the charge as it's up $33, about 2.5% out here. Now, in the case of Priceline, it too has a March 13th. No, it does not. It was not March. March, that's well below its March 3rd. What Priceline is doing is coming into a little breakout session out here that took place on February 21st. Priceline broke out with about 2 million shares, and it's come back into that area, really come back on lighter volume. Now, it has not tested the low of that breakout. It has closed the gap, that is for sure. But it has not. Let's use both. Let's use black lines across the bottom of this out here. Excuse me there for a moment. 866,000 shares was pulling back against 2 million shares. No way. Not enough to bust it down. Today's volume so far to the upside, 482,000 shares. Hey, this has got some pretty decent volume in it. Priceline. Now, is this a rotational thing? I can't tell you. But Priceline's got some pretty, why do I say pretty good volume today? Well, it's already done 482. We've been trading for an hour and 18 minutes. And the downdraft session from last Thursday only had 967,000 shares. So I have to say that Priceline has come back to a breakout area with light volume. And it's actually trading higher even into some downdrafts out here with some pretty decent volume. So that is on Priceline. Let's take a look at Google, see what Google is doing. So you got Priceline and Google up. Google's up $14 and that change out here. It's the $1,000 stocks that are leading the charge dollar-wise to the upside. You got Google trading out at $11.87. Let's go see if it is strong like bull. You had, and it actually looks maybe even a little bit stronger than Priceline out here. 877-927-6648. Dow's up 149, S&P up 14. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. I just noticed, looking at my screen out here, Intercept Pharmaceuticals off $51, down 11% right now. Let's go take a look at that. Here's VeriSign. Take a look at a stock chart under pressure out here. VRSN is the ticker symbol. It's off 8% this morning. Big volume. Considering we've only been trading for an hour and 20 minutes, this has got about 5 million shares already out of it. Where VeriSign is headed back to is this high volume low out here from November the 30th. 45 million shares, price level about 32.80 to about the 34.75 mark. Sure looks like that's where it wants to head to. Give me a moment here to put up Intercept Pharmaceuticals, ICPT, out here. Let's go see what kind of volume is behind this move. Hey, this has got big volume to the downside. Now, this has been one heck of a high flyer out here. Now, volume, let's keep things in perspective. This thing made a high on Friday with 664,000 shares. Today, so far, about 1 million shares off of the highs out here. Now, in order to really crack, this thing had some big volume topside on January 9th, 10th. Not too bad even on the 11th. 6.8 million shares, 5.9 million shares. So today it's done about 1 million shares in an hour, which is, we'll have to keep an eye on this thing here. This truly could be some volume off of the top from one heck of a big high flyer out here. That's Intercept Pharmaceuticals. So let's see, what else do we have that is trading to the, oh man, what is this? Well, it wasn't a penny stock on Friday, but it is now. I don't even see Spectrum Group International. SPGZ is the ticker symbol out here. SPGZ. So I don't see any news necessarily behind it, but something is rocking its world. Look at this thing. So this thing was, there was no volume in this. Okay, so I don't even want to spend much time on it. This thing here was up at about $3.44. On Friday, it's trading at 80 cents right now, but nah, not a stock chart you want to be paying attention to. All right, so what are we going to focus on today? Let's start to narrow this down with regard to the move. Is this move a change in trend? Is this just a bounce? Is this forming a B to a C if an A to B equals C to the downside? I won't know the answer to that until we see the volume coming in at the end of the trading session and see where price ends up being. But we want to be paying attention to that. What we can't pay attention to, we certainly can pay attention to the New York Stock Exchange. So that's the first area for us to focus on. New York Stock Exchange here right now is trading out at 10,365.20. We know it's trying to get back above the 2007 high, 10,387. Most important on the NYSE, though, are going to be net advancing issues today. 1855 is the magic number. 1855 or north of that says the Bulls take control of the ball. Anything less says the Bears still have control, and this could be nothing more than just a little counter-trend rally in the marketplace. So that's the first place that we want to pay attention to. Second place, I'd say pay attention on it, because I'm talking more on the daily type time frame out here. Pay attention to the VIX. Well, the VIX index is off of its session lows for sure, and it's above the 50-day exponential moving average. That number is 1491. You are trading out right now at 1625 out here in the marketplace. As long as price is above 1491, you've got the Bears are saying, hey, I've got control out here. So those are two things for us to really be focused on. Another thing is certainly going to be the currency pair out here. Sometimes a little bit more difficult for you to monitor. If we take a look at what the Euro-Japanese yen is doing, again, all it's done thus far is it's made the dead cat bounce, the 0.382 retracement around 141.71. I'd say if it closes above 142, then it'll move higher, 142.50 or so. So that's what we want to be paying attention to. And then you want to pay attention to the rest of TFNN today. And that means I'm handing the ball off to our man Basil Chapman. And Basil, he's not going to be handed off to Larry. Maybe Basil's doing 2 hours today. I'm uncertain of that. But we've got Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Have a great Monday, folks. As always, thanks so much for joining us. Have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.